Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 26, 2026, and we're diving into Intuit's latest earnings report for the second quarter of fiscal 2026. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Intuit has delivered a robust set of results this quarter, and I'm excited to break down the numbers and insights with you.
Revenue and profitability overview. Let's start with the top line. Intuit reported a total revenue of $4.7 billion for the second quarter, marking a 17% increase. John, can you elaborate on the key drivers behind this growth?
Absolutely. The growth was primarily driven by a strong performance in their global business solutions, which saw an 18% increase to $3.2 billion. Additionally, their consumer segment grew by 15% to $1.5 billion, with significant contributions from Credit Karma and TurboTax.
And what about profitability? How did Intuit perform in terms of earnings per share?
Intuit's adjusted earnings per share came in at $4.15, which is a 25% increase from the previous year. This was well above the analyst's forecast of $2.23, showcasing their strong operational execution and cost management.
Operational efficiencies and future outlook. Intuit has shown impressive operational efficiencies this quarter. Can you tell us more about their operating income and future outlook?
Sure. Intuit's GAAP operating income increased by 44% to $855 million, while their non-GAAP operating income rose by 23% to $1.5 billion. Looking ahead, they have reiterated their full-year revenue guidance of $20.997 billion to $21.186 billion, reflecting a growth of 12 to 13%.
That's quite promising. I also noticed they announced a dividend increase. What's the significance of this move?
Indeed, they approved a quarterly dividend of $1.20 per share, which is a 15% increase from last year. This move underscores their confidence in sustained cash flow generation and commitment to returning value to shareholders.
Segment performance and strategic initiatives. Let's delve into the performance of Intuit's key segments. How did QuickBooks, Credit Karma, and TurboTax fare this quarter?
QuickBooks Online saw a remarkable 24% growth, driven by higher prices and customer growth. Credit Karma's revenue surged by 23%, thanks to strong demand in personal loans and credit cards. TurboTax also performed well, with a 12% increase in revenue.
And what about their strategic initiatives, particularly in terms of capital allocation?
Intuit has been proactive in managing its capital. They recently entered into a new $2.2 billion unsecured revolving credit facility to support their working capital and corporate purposes, which reflects their strategic focus on maintaining financial flexibility.
CEO Insights. John, what insights did we get from Intuit's leadership regarding their strategic direction and innovation?
CEO Sasan Goodarzi emphasized their efforts in defining a new category at the intersection of AI and human intelligence, focusing on autonomous, done-for-you experiences. CFO Sandeep Aujla expressed high confidence in achieving double-digit revenue growth and expanding margins this year.
It seems like AI is a significant focus for them. How do you see this impacting their future growth?
AI is indeed a cornerstone of their strategy, particularly with their AI-native ERP platform aimed at mid-market enterprises. This focus on AI-driven innovation is likely to enhance their competitive edge and drive long-term growth.
Key takeaways. As we wrap up, Intuit has delivered a strong performance this quarter with significant growth across its segments and a robust outlook. John, any final thoughts on their investment prospects?
Intuit's strong financial performance, strategic focus on AI, and shareholder-friendly initiatives like dividend increases make it an attractive investment. Their ability to consistently beat expectations and Innovate positions them well for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Intuit's performance in the comments below.